What if you could start investing with just your spare change? For a long time, investing felt intimidating. People thought you needed thousands of dollars, a financial advisor, complex knowledge of the stock market, or years of experience. But today, that's no longer true. Thanks to micro investing apps, almost anyone can start building wealth directly from their phone, even with just a few dollars. And that's important because one of the biggest myths about investing is that you need a lot of money to begin, but you don't. What really matters is starting early, investing consistently, and letting compound growth work over time. Now, not every investing app is worth your attention. Some are built more for the hype and gambling than long-term wealth building, but others automate investing, improve financial habits, and grow your money steadily in the background. So in today's video, we're breaking down 20 micro investing apps that actually help build wealth in 2026. We'll cover what each app does, who it's best for, its biggest strength, and what to watch out for. Whether you're a complete beginner or someone looking to automate your investments more efficiently, there's likely an app here for you. So let's get started. Acorns. First up, Acorns is one of the most popular micro investing apps ever created. Acorns automatically rounds up your purchases and invests the spare change. For example, if you buy coffee for, let's say, $4.50, Acorns rounds it up to $5 and invests the extra 50 cents. It sounds small, but over time, those tiny investments add up surprisingly fast. What makes Acorns powerful is automation. You invest without constantly thinking about it. It's especially good for beginners, people who struggle to save consistently, and investors who want to set it and forget it approach. The downside? Fees can feel relatively high for smaller balances, but for building investing habit, Acorn remains one of the best beginner-friendly apps available. Robinhood. Next is Robinhood, which helped make commission-free investing mainstream. Robinhood gives users access to stocks, ETFs, options, and crypto, all with very simple interface. One reason Robinhood became so popular is accessibility. You can buy fractional shares, meaning you don't need hundreds of dollars to invest in expensive companies. Now, Robinhood is great for convenience and ease of use, but there's also a caution here. The app design can encourage frequent trading, and statistically, constant trading usually underperforms long-term investing. So if you use Robinhood wisely as a long-term investing platform, it can be useful, but avoid turning investing into gambling. Stash combines investing with financial education. That's what makes it unique. Instead of overwhelming beginners with technical language, Stash simplifies investing concepts and helps users learn while they invest. You can start with very small amounts and invest in individual stocks, ETFs, or themed portfolios. It's especially good for new investors because the more people understand investing, the less likely they are to panic when the market is volatile. Public. Public takes a social media style approach to investing. Users can share investment ideas, follow other investors, or learn from public discussions. This creates a community-driven investing experience. Now, this can be helpful for learning and discovering new ideas. But remember, social investing also carries risks. Just because something is trending doesn't mean it's a smart investment. The best way to use Public is as an educational tool, not a source of emotional investing decisions. Still, for younger investors who enjoy community engagement, Public can make investing feel less intimidating. Webull. If you want more advanced tools without paying commissions, Wibble is a strong option. Compared to beginner apps, Wibble offers advanced charting, technical analysis tools, extended trading hours, detailed market data. This makes it appealing for people who want to grow beyond beginner investing apps. The platform is powerful, but it can also feel overwhelming for complete beginners. So Webull works best for disciplined investors who want deeper market insights without high fees. Sophie Invest. Sophie Invest is part of a larger financial ecosystem. In addition to investing, Sophie offers banking, loans, credit monitoring, and financial planning tools. That convenience appeals to people who want everything in one place. Sophie Invest also offers automated investing, active investing, and fractional shares. One major advantage is simplicity. Users can gradually build wealth while managing multiple parts of their financial life inside one platform. Betterment. Betterment is one of the leading robo-advisors. Instead of choosing individual investments yourself, Betterment automatically builds and manages a diversified portfolio based on your goals and risk tolerance. This removes a lot of emotional decision making, and honestly, for many investors, automation can outperform emotional investing habits. Betterment also offers automatic rebalancing, tax loss harvesting, retirement planning tools. For busy people who want long-term investing without constantly monitoring the market, Betterment is a strong option. Wealthfront. Similar to Betterment, Wealthfront focuses heavily on automated investing. One of its standout features is tax efficiency. Wealthfront uses strategies designed to minimize taxes and maximize long-term returns. That may not sound exciting now, but over decades, taxes can significantly impact investment growth. Wealthfront also offers high-yield cash accounts, financial planning tools, automated portfolio management. It's ideal for investors who prefer a passive, hands-off strategy. M1 Finance. M1 Finance combines automation with customization. Users create custom investment pies made up of stocks or ETFs. The app then automatically allocates and rebalances investments based on your chosen percentages. This gives investors more control while still keeping automation benefits. M1 is especially popular among long-term investors who want flexibility without daily trading. And because investing is automated, it helps remove emotional decisions from the process. Fidelity Investments. Fidelity is one of the most trusted names in investing. And unlike many newer apps, Fidelity combines bigger accessibility with institutional level investment tools. One huge advantage is fractional shares. This allows investors to buy pieces of expensive stock with very small amount of money. Fidelity is also known for strong retirement tools, low-cost index funds, research resources, and long-term investing focus. For serious wealth building, Fidelity remains one of the strongest all-around platforms. Charles Schwab. Charles Schwab offers low-cost investing combined with powerful research tools. It is a strong option for investors who eventually want to grow beyond basic investing apps. Particularly respected for customer service, retirement accounts, and long-term investing tools. It may not feel as flashy as a newer app, but it's built for stability and long-term wealth management. Vanguard. When people talk about long-term investing, Vanguard almost always comes up. Vanguard is famous for low-cost index funds, and index investing has historically been one of the most effective long-term wealth building strategies. Instead of trying to beat the market, index funds aim to track the overall market. This approach is low cost, more diversified, less stressful, historically difficult to outperform consistently. Vanguard is ideal for disciplined investors focused on long-term compound growth. Cash App investing. A lot of people know Cash App for sending money, but it also allows investing. Users can buy stock, fractional shares, and Bitcoin with very small amount of money. Its simplicity makes investing accessible to people who might never open a traditional brokerage account. The downside is fewer advanced investing tools. But for beginners wanting a very easy entry point, Cash App investing works well. Qapital blends saving psychology with investing automation. Users create rules like round up purchases or save when avoiding impulse buying, automatic transfers based on habit. This makes investing feel behavioral rather than forced. And behavioral finance matters a lot because successful investing is usually more about consistency than intelligence. Opportune, previously known as Digit, now part of Opportune. This app automates saving and investing based on your spending behavior. It analyzes your income and expenses, then automatically moves small amounts into savings and investments. This helps people invest money they might otherwise spend. Automation removes friction, and less friction usually means better financial habits. Fundrise. Want exposure to real estate without buying an entire property? That's where Fundrise comes in. Fundrise allows users to invest in diversified real estate portfolios with relatively low minimum investments. This gives everyday investors access to commercial real estate, residential development, income-producing properties. Real estate can add diversification beyond stocks. And for people interested in passive income, Fundrise offers an accessible starting point. Ground Floor. Ground Floor focuses on real estate debt investing. Instead of owning properties directly, investors help fund short-term real estate loans. This creates opportunities for potentially higher returns, but also higher risk. Ground Floor can be interesting for diversification, but investors should understand the risk carefully before they jump in. Titan. Titan markets itself as a more actively managed investing experience. Instead of purely automated index investing, Titan's team actively manages portfolios aiming for long-term growth. This appeals to investors who want professional management but still prefer app-based investing. However, active management usually comes with a higher fee. And over long periods, passive investing often outperforms many active strategies. So Titan works best for investors comfortable paying more for active management. E-Trade. E-Trade has been around for decades and remains beginner-friendly while offering advanced tools as investors grow. It's especially strong in educational resources, retirement investing, and research tools. For people wanting an app that can scale with their experience level, E-Trade is a solid choice. Ally Invest. Finally, there's Ally Invest. One of Ally's biggest advantages is integration with Ally Bank. This creates a smooth experience for banking, saving, investing, all in one ecosystem. Ally Invest is known for low cost, simplicity, and user-friendly tools. It's especially appealing for people who already bank with Ally and want easy investing access. Here's the truth about investing. Building wealth usually doesn't happen overnight. It happens slowly through consistency, patience, discipline, and time. And that's what makes micro-investing so powerful. It lowers the barrier to entry. You don't need thousands of dollars to begin. You just need to start. Even small amounts invested consistently can grow dramatically over years thanks to compound growth. Now, no app alone will make you wealthy. The app is just a tool. Your habits matter more than the platform itself. The most important thing is choosing 1 or 2 apps that fit your goals and sticking with them long enough for the process to work. Because investing success is often less about perfect timing and more about time in the market. If you found this video helpful, make sure to like the video and subscribe for more simple strategies to grow your money and build long-term wealth. And in the comments, let me know which investing app you have tried or which one you're thinking about using next. Thanks for watching, and I'll see you in the next video.